All right, what is going on with AMC and what's going on with the stock market as a whole? Things are wild right now. So I found a buddy of mine. I said, look, he tipped me off to AMC weeks ago. Thank you, Alex. Got in around 12, 13, 14 range. And so it's been a wild ride. And a lot of you have been asking questions. What's going on? Should I take a position on it? Should I hold what I have? Alex, this is what he does. He had a business before. This is what he's doing full-time now, is day trading. Alex, welcome to the show. Let's talk about what's going on.
Chris, thanks for having me. Really excited to be here. First of all, I'm not a licensed broker, broker-dealer, market maker, investment banker, investment advisor, analyst, or underwriter. Our discussion today is an analysis and predictions derived from my own individual interpretation and the models that I've put together and the readings that I've done. So nothing of this discussion should be misconstrued, and I want to put it out there that I'm not liable for any investments or security purchases that anyone makes based on this conversation. So that being said, what's going on with
that disclaimer out of the way? I like it.
Yeah, absolutely. Well, there's a lot of buzz going on, obviously. Due to COVID, a lot of businesses like AMC had to temporarily close down. And think about how many locations they have all over the world. Big brick and mortar locations. High costs for the real estate. Hedge funds saw blood in the water, and they decided to start attacking the price of these companies' stock. Companies like not only AMC, but GameStop, Express, Koss, Bed Bath & Beyond, Nokia, BlackBerry, a few others like Clove. You've probably heard of a gamut
all those, right?
But anyways, the hedge funds started attacking the price of their stocks, and they sold millions of short shares, which were borrowed from their brokerages. And historically, this has worked because no one's going to care about investing in an over-leveraged, undermanaged, and failing company. But a bunch of people on Reddit discovered that, hey, if we hedge these companies and we back them, we can essentially put these short sellers in a position of fault. And the interesting thing about when you short sell a stock is that the losses are limitless. And when I say limitless, if you short a stock at $10 and it goes up to 100, you owe 90. If it goes up to 1,000, you owe 990. So essentially, all these people on Reddit band together, the retail investors, after hearing about GameStop in January, they decided to buy AMC stock and GameStop stock. It's a tongue twister.
It is.
Negating the downward pressure of the hedge funds and putting the price in a upward trend. Maybe this is because of nostalgia. Maybe it's because people like me have a vendetta for these hedge funds closing stores like Toys R Us. I never get to take my kids to Toys R Us because hedge funds decided that it was an unprofitable company.
Yeah.
Or maybe it's because a friend told them to invest in the company on Facebook. Who knows? Right. Nonetheless, it's playing out like the 9 symphonies of Beethoven, man. Now, all the hedge funds are in losing positions, and instead of covering their losses, the hedge funds are going full tilt, and they're pushing all their chips onto the table, per se.
Right.
They're hoping that the price is going to drop, but every day things are getting much, much worse for them.
So and I'm going to pretend like, this is completely unsophisticated. There's a lot of people that maybe don't even know what a short position is or what hedge funds do or what have you. So what they're doing is they're betting that the company is going to continue to go down, right? And they make money when that happens, right? So you're betting against their successes. Now, does that further drive down the stock when people take short positions? Does it like accelerate that process?
Absolutely. It drives down the equity or the stock value tremendously when people take short positions. And just like you said, it's basically betting on the company losing.
Yeah.
Well, in this situation, a bunch of nerds like me said, hey, we're going to bet against you. And you know what? All of us together make up a much bigger hedge fund than yours.
Yeah.
Think about all the institutional investors. They've got a lot of cash. But if you take every retail investor sitting in a basement like me in Cincinnati, Ohio, and put their portfolio against, these buildings in Chicago, it's basically the hive mind working together. And Every single day that these hedge funds are in these short positions and these stock prices go up, they're paying billions of dollars just to stay above water, and it's not sustainable. So right now it's just a question of who's going to outlast the other. Are people psychologically going to get scared and sell their positions, or are hedge funds going to become over leveraged, in which case brokerages would seize their assets to repay the debt service? And there's something called a margin call, and when that occurs, the hedge funds are forced to cover stock prices at the fair market value. So if these prices keep going up, their risk becomes higher, their lending institutions get scared, they get margin called, and they have to pay for the stock at what the fair market value of the stock is. So if it goes up to $900 per share, or $500, or $25,000, who knows?
Yeah.
Either way, they have to pay the fair market value of that share when they're margin called. Otherwise, their assets are liquidated through the brokerage. So it's kind of like a black hole sitting outside of these, high-rise buildings on Wall Street, just getting ready to suck them out, suck the whole company out, and put them down into the ground.
Wow.
And it's really interesting. It's never happened like this before.
It is. I always say this. Obviously, I think you and I are kind of in alignment with kind of our views on economics and stuff like that. I always say that the free market doesn't always get it right, but eventually always gets it right. Right? Like the free market created what these hedge funds are doing, driving down these companies. And the big thing is, it's really sad, and you said it yourself about Toys R Us. You're talking about people's livelihoods, right? When you're betting it, like hedge funds, they're getting rich while 18,000 people lose their jobs, which is how many people AMC employs, right?
Yeah.
And so you see the market course correcting to account for the fact that now you have these hedge funds taking advantage of that, being capitalistic, doing the opposite, and slamming them back for it. So if you just are patient enough and allow disruption to happen, the free market eventually gets it right. That's kind of always my take on things. Now,
yeah, absolutely. I mean, for decades, these hedge funds have been burying companies and driving down stock prices till companies go bankrupt and have to shut down 5, 6, 8, 1,200 locations, putting 50,000 people out of jobs.
It's crazy, man.
And they, to their credit, it is a capitalist society, and they're trying to make money just like we are.
Sure.
But you know what? Look at the 99 versus the 1%. Look at the Occupy Wall Street movement that happened in 2008 when these hedge fund managers were dumping champagne on people the day the market crashed during the housing crisis. This is just the retail investor, basically saying, F you to all the people that have put them down for so many years.
Yeah. All right. So I want to talk about AMC, but then I want to talk about the future, right? Because I feel like we've opened up, I don't want to say Pandora's box, right? Again, it's going to get murky. I think it's going to be a little bit confusing, but I think we're entering a new territory as my unsophisticated eye sees it. But let's talk about what's going on specifically right now with AMC. So a lot of people, I think they're making the mistake, Alex, of looking at it purely from the company's strength. And they're like, well, the company's in debt. Well, the company's underperforming. Well, the company's not worth 60 or whatever we're at right now, 50, 60 a share. Kind of speak to that. It's purely based off of this back and forth chicken game going on between the hedge funds and the retail investors, right? Can you kind of elaborate more on that and why this price doesn't have to align with the technical value of that company?
That's a fantastic question. And I'm really glad you asked it, because I had an argument with one of my family members recently about the exact same thing. And, and I'm going to use this term lightly, from a boomer's perspective, the fundamentals of investing are looking at the technicals, the profitability, the company itself, and what the, exponential growth patterns of that institution are, potentially going to do.
Right.
The fundamentals of investing in a short squeeze, which is what most of these retail investors are hoping for with AMC and GameStop and the other shorted stocks, don't exist. Those fundamentals are flawed. This is essentially a retail investment movement of sorts, where this hive mind of individuals have, looked at this once in a lifetime opportunity and said, this might never happen again because of the institutional changes with the SEC, the DTCC, the federal government. But essentially it's, and I hate to use this cliche terminology, but it's kind of like buying a ticket to the moon. You don't know if you're going to get on the ship. You don't know if the ship's going to blow up halfway there. But a lot of people realize that, the risk versus reward on these plays is undeniably good. And from my seat, I look at one share of AMC and say, hey, if I want to put 50 of my hard-earned dollars on the table, there's a potential that I'm going to lose it.
Right.
I could lose it while we're talking right now. But tomorrow, if I keep it on that table, who knows? Maybe 500,000 other people are going to put 50 of their dollars on the table. And this rocket ship will get enough fuel to turn my $50 into 500, 700, 900. Who knows? When a short squeeze happens, there's a lot of variables. It's very violent and it's very unpredictable. So there's no way to tell, but it is a once in a lifetime, ticket to the moon. It's not a fundamental investment.
Okay. So that's good to clarify that. So I've been doing this too, Alex. I've been looking back at what happened with GameStop, but there's some things. I think I see some patterns. Again, I'm unsophisticated. I don't know what I'm talking about. I don't know how to read charts. I don't know what candles are. I don't know what boom boom is. Like all this stuff these guys talk about, I'm not familiar with. But looking at it from an unsophisticated eye's perspective, there's a lot of similarities I'm seeing between what happened, this slow crescendo and then this instant just like rocket ship with GameStop. Now, what happened, and I know people have blamed Robinhood, and maybe rightfully so. They blamed the trading stopped, but whatever happened, it really just killed the momentum of what was happening. It never fully reached that peak again. Can you speak to that, and is that something that's potentially going to happen with AMC?
It's a great question also. What happened with the situation on January 27th, I remember it very clearly because it was the day before my birthday and I was sitting with 3 laptops in front of me. I was not yet trading full time at that point, but very in tune to the situation. And what happened was certain brokerages, once the volatility of these stocks started skyrocketing, they put closing position only regulations on these 2 stocks. And what that means is people could not buy it. So what they did was basically they shut down the momentum.
Well, the rug out from under it.
Yeah, it was a rug pull. And the reason was because they didn't have the liquidity with their clearing houses. And they didn't have enough cash to cover, the potential losses if these stocks squeezed. And, they thought for a long time, for 5 months that they were out of the woods until, a bunch of retail investors continued looking at the numbers, continued looking at the short interest, the borrow fee, the trajectory of the stock, and realized that those people that, were investing in it back in January and driving these short squeezes, they never left. They were all there still. And now it's become a big social movement. Who's to say that the brokerages don't do that again? I will mention that I'm confident Robinhood and several other brokerages are in the middle of multiple class action lawsuits for the compliance regulations that they violated during those early morning hours of trading on January 27th. But it's really a test of leverage, and it's pretty much a push and pull between the retail investor and Wall Street, and it's a really violent ride.
Yes.
So if you are on the ride and you're considering investing in it, just be psychologically prepared to see some pretty big swings up and down with your money.
Yeah, I'm gonna jokingly, I'm going to send you my medical bills when this is all said and done.
Have your cardiologist call my attorney.
Jeez. So, do you anticipate? Because I know GME is still play, right? I know that hasn't technically, even though it was called a short squeeze, fundamentally speaking, my understanding is that it technically did not squeeze yet. Is that correct?
No, you are exactly right.
So what happens when these things, if they do squeeze? This is unprecedented, right? Well, I don't want to say unprecedented. I think it happened. Who was it back in the day, years and years and years ago, where this happened? I keep seeing the model. Volkswagen. That's right.
Yep.
So
yeah, back in 2008, Volkswagen had the same thing happen, and it's happened on smaller scales a few times since then. There was some logistics company it happened with recently, but never before have millions and millions of people band together to take on billionaires, these hedge fund managers tanking, and the ones who are trying to tank companies like GameStop. I remember when I was a kid, I'd go to the mall, and take my used video games and, go trade them in and get a discount on some new games at GameStop.
It's worth $5. Say it's worth $5 and they turn on sale for 65.
Exactly. It's a very nostalgic business, and whether or not they made profits off 12-year-olds, that's beside the point. But
yeah.
Same with AMC. Everyone's always bet against the movies. There's been many times where people said, Netflix is going to put movie theaters out of business. The DVD players are going to do it. But every single time, the movies come back. And, these hedge funds made a bad bet. That's what it was. They put their pride ahead of they put their egos and their pride ahead of their brains. And, when institutional investors like us said, I want to take my kids to the movies, you're not closing these down.
Right.
You already took Toys R Us away from us, so, with the social media sources like Reddit, Facebook, Discord, YouTube, WhatsApp, there's now a network of forensic accountants, independent analysts, former hedge fund executives, investors, financial experts, self-proclaimed nerds like me that are sitting in their basements, and they're all talking, and they're communicating in a way that's never been possible. And they have an unlimited database of research, of due diligence available right at their fingertips at the retail side. And, Charles Payne from
Fox, right?
Making Money on Fox, Charles Payne from Making Money said, the retail investors are essentially playing the same game as Wall Street. Same game Wall Street has played for decades, but now we're winning.
Yeah.
It's poetic, man.
But the thing is, and I want to get into that. So I'm going to provide a little commentary here, but then I want to talk about the future of what could happen with this AMC stuff, right? As you see it. The thing is, I was thinking about it the other day. I'm like, if I went to just your typical brokerage account, or back in the day, right? I'm waiting for the Wall Street Journal to show up. This couldn't happen because when so the other day it was like 8.5 million shares were sold or whatever. You wouldn't be able to react fast enough to where that price was just driven down completely and just completely tanked, right? Exactly. The fact that you could jump on it instantly as a retail investor is the reason why it stopped that and bounced back so quickly. Am I wrong in that assessment?
No, you're absolutely right. I mean, there's companies like Ortex and Fintel, and even through some of the brokerages, they're allowing, level 2 forensic and very intricately outlaid and understandable information that was previously unavailable to any retail investors.
That's amazing.
Back in the day, when our grandparents were investing, they, like you said, they had to look at the Wall Street Journal, and they were 2 days behind at that point.
Exactly. Right. It's already happened. It's done.
Yeah. So they're finding out what their stock's worth 2 days after it's been, tanked. Yeah. So, it's been a big change in the tide of, the overall market. And it's for the better, in my opinion.
I totally agree.
Who's to say that, some, CEO hedge fund manager can have control over 50,000 people's livelihoods just because they want to buy a third yacht,
Right. Totally agree, man.
It's a joke.
All right, so let's get again. I'm dying to get into that. I want to talk about long term, what this means for the future, but I did want to make sure we promise, we talk about what's going on and what people can maybe theoretically expect with what's happening with AMC. So, do you see something similar happening where we get to a certain threshold? I've seen people say AMC 100K, and I'm like, yeah, but eventually you're going to get to the point where they try to pull some shenanigans, pull the rug out, stop it in whatever ways they can. Is that something you see, or like, I know there's a high likelihood of, I think it was like 99.9% likelihood of a short squeeze happening with AMC. So I think this is more of a when, not an if scenario, the way I'm looking at it. What do you think happens go ahead.
It really comes down to how bold retail investors are and how psychologically prepared they are for the tricks that these hedge funds are going to throw at the stock market. These guys are good, algorithmic trading, machines that are basically going against people like me clicking a mouse. Right. But ultimately, I'm not a fortune teller, and there's no person on this planet who can accurately predict, at least on purpose, what the potential outcome of this situation will be. Will the stock price of AMC go up to $70 today? Will it drop down to 10? Who knows? There could be a lot of things that happen. Right. I will say that it could, go one of two ways. psychological warfare on steep swings in stock prices is going to drive away retail investors. That's just the sad truth to it, because people don't, have the chutzpah to deal with these red lines. They get scared when their money starts going down and they sell. It's just a psychological fact. And when they sell those positions, those hedge funds get an edge every single time someone closes out a position and sells their stock, because they're afraid. But if people hold and they band together and they continue to push the volume and the price up on these stocks, eventually Wall Street's going to run out of cash. These institutions are going to run out of money. And when that happens, they're going to have to liquidate their assets. And when their assets are liquidated, they'll be margin called, and their portfolios are going to go up in smoke, and it's going to come right into the pockets of individuals like you and me and everyone who's probably listening to this podcast. Can I guarantee that's going to happen? No. Is it a once in a lifetime opportunity? I think so.
Okay. But do you see them being able to, and then when I say them, I mean some of these brokerages or platforms like Robinhood, do you see the similar shenanigans to what happened with GameStop, where they're going to try to bat it down or try to stop the momentum when we get to 500 or 1,000 or even $100 per share?
They could try, but there have been a lot of regulatory changes within the SEC, the DTCC,
that's good news.
and even at the brokerage levels that are going to circumvent these things from happening. Additionally, regulators in the market are cracking down on hedge funds in the ways that they're using so-called naked or synthetic shorts, which are basically IOUs, borrowed from a broker but never returned. So ultimately, there's people that could go to jail over this, and deservedly so.
Crazy, man. That is wild. Well, yeah, I think the concern that I myself have, as well as many others, and maybe this is wrongful to assume this, is that they won't be able to pay it out because they go bankrupt or because whatever. And I know you posted something recently that was interesting, that I found interesting, was it was not insurance, but some kind of a security in place where they've raised it or almost doubled it up to like $70 trillion in the event that something like this would happen. Is that accurate?
As of Wednesday this week, the total value of the stock market was 46 trillion.
Okay.
Previously, the DTCC had a insurance line for about 49 trillion. And ironically, about a week and a half ago, it was raised, that insurance line was raised up to $70 trillion. So are they preparing for something? I don't know. I can speculate, but at the end of the day, it's suspect.
Now, so something that I thought, I was like, are we going to crash the economy? Because that kind of influx of cash into the market seemingly would just cause just ridiculous inflation.
Good question. It's unquantifiable to speculate on that. But I will say that if hedge funds who own very large stakes in institutions, if their assets are liquidated via margin call, then those assets will be sold. And
so it'll be up to them whether they pay it out or not. They can't just file for bankruptcy. They'll have to, because those assets will be liquidated regardless of what they decide to do.
Right. And if those assets are sold, the stock prices of all those companies with which those assets sit will fall. I mean, we could be looking at a super recession with hyperinflation, and it's kind of scary to think about, but this could very well be, if things play out, and there's a lot of dominoes that have to be lined up and knocked over in the right sequential order.
Sure.
This could very well be the largest transfer of wealth in human history. It could be biblical, and it's very, very interesting to watch it all play out from a computer screen.
It's just, regardless, like you said, regardless of what happens, I think it's historic. And you mentioned this a couple times, and I finally want to get to it. I've been holding us off from getting there. But what are the future ramifications of this? Let's say this happens. Either one or two things is going to happen. Either it doesn't happen, but it was damn near close, or it does happen, and they're like, crap, this can't happen again, because this is the most massive reshuffling of the wealth that we've ever seen in human history. What do you think? Why is this once in a lifetime? What do you think some of the changes are going to take place to where this is it? You'll never see this happen again. Or will we see it happen again?
Well, there's been a lot of, I mentioned, regulatory changes within the Securities and Exchange Commission,
Yeah.
with which they're very much cracking down on the hedge funds that have created this whirlwind or storm of volatility within the market. And my belief is that because of those regulations and those changes, I don't think it's ever possible that this situation will happen again. And to put the entire marketplace at stake because of a bad bet and then not be able to repay it is a very irresponsible method of tanking a business just so you can buy a new penthouse in New York City. And that's just my opinion.
But no, I totally agree. But do you think it's okay? So you mentioned some regulatory things. I want to get into the nuance of what that potentially looks like. But do you also think that just due to the nature of now the new, right? I hate the word new normal because everybody uses it in capacities that drive me insane. But could this be a more new normal where they won't dare to try it again because they know what could theoretically happen, the clapback that can happen? Is it a combination of the two? And then what are some of those nuances as it relates to the regulatory side of things?
Yes, it's a combination of two. I think the billions of dollars that these institutions are bleeding, they're hemorrhaging money right now, every day. I mean, not only are they losing, on the Wall Street side, but they're also losing with their lenders and the debt service or the interest that they have to pay on the money that's, been leveraged to, put these short positions in the market. So they've learned their lesson. They're going to learn it a lot harder if this squeeze happens. But either way, they're still bleeding money. And then, like I said, the regulatory institutions, to the best of my knowledge, are going to prevent it from ever happening again as well. So is it a once in a lifetime situation? It happened in 2008 with Volkswagen.
Right.
I guess they thought it would never happen again.
Right.
But now it's happening with like 7 different companies. And AMC and GameStop are the two that you hear about most. They've got the most exposure.
Yeah.
But I am confident that if AMC pops, if the short squeeze starts on any one of these, it's gonna domino the rest of them, and they're gonna go up in smoke all together. It's gonna be biblical. Like I said, it's gonna be insane.
People talk about breaking the internet. I feel like we're about to break the stock market.
We could very well break the stock market within the next month.
That's exciting, and also a little bit the unknown, right? The unknown, the abyss of the unknown is also kind of terrifying too, right? Just getting that, rocking the boat that far, it's like that comes with consequence,
Well, that's the interesting thing. A lot of people are very risk adverse, but they're hedging themselves by investing in these companies because they know that if the companies fail, they'll be out a little bit. But if the companies, they're hedging themselves against the short squeeze,
right.
Essentially meaning they're worried that their entire portfolio is going to tank if this short squeeze happens. So they're getting in and acquiring some assets within GameStop and AMC just as a safety net. So if the thing takes off and the rest of the portfolio goes down, that they're still going to make a profit on at least one of the stocks and be right side up. So a lot of people who are very risk adverse are even getting on the boat. It's pretty interesting to see.
Yeah, it's funny. I'm sure you've had a ton of people reach out, but I've had some people reach out as early as an hour ago and be like, "Should I still jump on? Should I still buy?" And obviously, like we said, we're not here. I'm certainly not in any position to give financial advice when it relates to stocks. As you mentioned, you are not either. But as you're looking at it, it looks like there's still potentially a lot of room to go. But I would say probably what you would recommend, or what you're doing rather. Let's just say that. Let's say what we're doing, not what you should do. Is I'm not putting in anything that I'm not willing to lose completely 100% of. Would you say that's what you're doing as well?
Yeah. If someone listening to the podcast is going to consider this as a potential move within their individual brokerage account, like I said, you have to ignore the fundamentals of investing. These companies are very overvalued in their stock price. From a boomer's financial ideology, putting money into these stocks is crazy.
Yeah.
In fact, there's even a moniker going around Wall Street. They're calling people dumb money. People like us that are invested in these two companies, they're calling us dumb money.
Yeah.
But you know what, Chris? The dumb money right now is winning by a lot, by a whole lot. And as it sits, these shorts, they haven't even begun to cover their losses. So theoretically, things could get tremendously worse for them. That being said, I can't recommend whether people should or shouldn't get in, out, or out at this point.
Yeah.
That's up to their own discretionary risk thresholds. But I will say that one should never ever leverage more cash than they're willing to lose, just like you said. Personally, holding a large number of shares at a low average and strategically plotting my exit strategy on a day-to-day basis by monitoring the borrow rates and the short interest and the price action is my strategy. But ultimately, if you think the price of AMC or GameStop is going to go up today, tomorrow, next week, it's probably a good time to invest. If you think it's going to go down, then stay out. It's your decision and your risk.
Yeah. It's a tough decision to make, because I think there's a lot of FOMO, because they hear things like what we've said before, what you said. This is a once in a lifetime thing. This will never happen again, right? Like the opportunity, it could be, we could hit whatever number, right? And there's so much information and so many people talking about the theoreticals, 5,000, 10,000, 100,000, right? And it's like, that would change my life forever. Yeah. And you said something recently too that I saw, and I thought it was very applicable to this. Something to the effect of, and this is a saying, I've heard it applied in other ways, but the pigs get fed and the hogs get slaughtered, right? And it's like, at what point do you say, this is what I can fiscally and responsibly afford to put into this so that I make a little bit off of this? Not, I'm going to over leverage myself to where I'm going to lose my home, banking 100% on this thing to take off, like these guys theoretically say it might.
Yeah. I mean, a lot of people don't realize that, if you invest $250 in one share of GameStop, and that stock price goes down to $10, you just lost $240. And when you sign up for a brokerage account, you're putting your social security number, you're putting your personal identification information in. It's basically like opening up a bank account, having a brokerage. And if you lose that money, they're going to get it eventually, whether they garnish your wages or not, or whatever it takes. So you have to be very careful when you invest. It's not like throwing $50 on the roulette table and walking away after a loss. There's a lot to lose, and from an investment standpoint, it's flawed. But if you look at your risk versus reward, and your reward to you, if the reward to you is justified, then it's your decision to pull the trigger.
Yeah. I know we follow, you turned me on to Trey's, I don't know his actual last name, I just know he's Trey's Trades. So I follow him on YouTube, and he said, he posted something, I guess it was last week. He talked about to remember your why, right?
Yeah.
And I feel like that's so applicable, because there's such a temptation, right, to jump in. And it's like some people are doing it for a very strong why, and they're just, and I teach this in business too, right? Start a business. It's like, if you lose sight of your why, and I've had this happen to me, I'm sure you've had it happen to you, things start to take off, and all of a sudden the people that you cared about serving, or the people that work for you, you're just focused so much on the numbers that you kind of become a bit cynical. You don't really focus on those, right? Customers become numbers, employees become, just links in the chain so you can accomplish what you want to accomplish. But if you don't lose sight of your why, as cliche as that sounds, I feel like it's kind of your north node. It's kind of your guiding compass to keep you on the right path, or at least headed in the right direction, and not over leverage yourself or lose sight of what you're really trying to accomplish and what have you. So I think it's very, very important. It's going to be a really interesting time, because a lot of people, I would say, and maybe this is better for you to answer, but this is a high degree of risk in relation to you just putting $100 down on Procter & Gamble, right? Like, there's huge volatility that you're not going to see in a lot of just traditional investments. What would you say, I guess, as far as like out of a scale of, Likert scale 1 to 10, how risky and dangerous is this for somebody to really be jumping into? Are we exceeding even the levels of 10 and beyond? I mean, it seems very risky.
Good question. From a risk threshold standpoint, my personal belief is that AMC is a much riskier move. You look at other, movie theater chains like Cinemark and their stock prices. I think the valuation of AMC, as it currently sits from a stock or shareholder's perspective, would be maybe $15 to $20 per share. And
right, I agree.
As it currently sits, it is at $51.75.
So we're still hovering around the mid or that low 50 range.
Always watching, yeah.
Yeah,
So
even when you're talking, just multitasking over here.
yeah, I always have to. But
Got to.
so I think there's a $30 delta right now with AMC. So that I think that's your risk threshold on AMC. If you're going to look at GameStop, I would consider that, a higher share price. A lot of people are a little bit scared of that because it's $250 a share versus 50.
Which is what scared me about it, I'll be honest.
Yeah, but the company has instituted a new executive team, a bunch of rock stars like Ryan Cohen, who came from Chewy. He cornered an area of the market, as far as pet care products and prescriptions, RX prescriptions for pets, and basically stole the market away from Amazon. Like he put them in there, because he found a niche, and he is joined as chairman to GameStop. He's hired a freaking rock star team of executives, and they are, doing some very speculative things that are going to be announced in their upcoming shareholders meeting. I think it's on the 9th of June. Very much looking forward to that. But there's been discussions about a potential dividend, which would essentially it would be like dousing this fire with gasoline. If they announced a dividend or the potential of a dividend, if the word got out, it would be nuts. So I guess what I'm saying is all these things need right now is some type of propellant, to something to ignite these pools of gas. And I think from a prospective business standpoint, GameStop has much higher aptitude. They're creating e-commerce chains and networks where people can potentially sell their licensed video games that they download on their computers or their PlayStation. They can sell that to another person, which has never been available in the marketplace. So they're doing a lot of things that are going to disrupt that market and change that entire marketplace. And from a volatility standpoint, I would venture to say that AMC is much more dangerous, but it's got kind of the attention of the main public right now. But don't sleep on GameStop. It's a giant. It's a giant that's been slumbering, and it just needs a little poke.
Yeah, I've been seeing you post that a lot, so I'm glad that came up multiple times here. Something I think that maybe we've overlooked, and you just mentioned, I'm glad it came up, was that fundamentally, we talked about how these companies are not worth what they're currently trading for. However, let's backtrack 6 months. I don't think you would have said the same thing about GameStop. You'd probably be saying it similar to what we're saying about AMC right now, where it's not worth this. They're not a good company, fundamentally speaking, or they're not profitable, what have you. The fact of the matter is that all this activity has allowed them to do the things that we're talking about, make themselves a better company, start reinvesting in there, right? And now you see the same thing with AMC. They've raised like almost $1 billion, to my understanding, $750 million to reinvest in new theaters. So there's a lot of things they could do to make themselves better companies. I think people are looking at it from their side of, well, I can get rich off of this. Well, sure. I mean, you could make some good money off of it, but also too, if you care about AMC, you care about some of these, organizations, these companies that have been around and we've known, and again, sentimental value, you're helping them get themselves back on their feet, specifically after COVID, right? When these companies took a big hit. So do you see that happening with AMC? Do you see them continuing to innovate and disrupt and start becoming actually more stable, not just purely based off of this back and forth with hedges and retail investors?
Yeah, absolutely. AMC, yesterday there was an interview with Adam Aron, their CEO, and he disclosed that we can talk about that if you'd like. I'm going to table that for now.
Yeah, but please do.
I'm gonna under-table that for now.
Yeah, please.
No pun intended. But essentially, he talked about the prospectus of acquisitions, basically buying out their competitors to corner the marketplace around the business that they operate. Yeah. They're doing a lot of work to deepen their relationships with their investors, and they're doing some really cool things, offering some stimulus packages to the individuals that are shareholders. But ultimately, they've raised enough cash to sustain their business, even if doors are closed for the next 2 years.
That's fantastic.
They were on the precipice of going out of business.
He said January. That too in one of those interviews.
Yep, he said they were about 2 weeks from calling the bankruptcy attorneys. Jeez. And they secured some funding from a institutional investor that allowed them to sustain. And then when their stock had a mini squeeze in late January, they raised a bunch of cash, which basically he announced they were not going to go bankrupt. Now, flash forward to now where their stock price is currently $51.45. They have raised several $billion, and they're in a good spot. Now let's transition over to GameStop. They were also on the precipice of going bankrupt, and this guy named Ken Gill, he's also known as Roaring Kitty on Twitter, but on Reddit he's known as Deep Effing Value. He discovered this whole conundrum with the short positions, and he's the one that kind of sparked the interest of Reddit and created this entire scenario that started all of this. And because of that, there have been monumental changes over the last X number of months. But looking at GameStop, they have no debt. They just raised a couple $1 billion in cash. They've got a rock star executive team. They're creating disruptive change in their market. And they're very, very adept to the needs and changes that need to happen to make the business successful. So, like you said, both of these businesses have gone through tremendous change for the better. And I would see them as very viable contenders within their marketplaces for years and years to come.
Love it. Love it. All right, man, I got to let you get back to watching all your charts because I know you're probably getting antsy at this point. But we got to wrap up because we did just tease it, and everybody's going to be like, why? What is he talking about with the guy in his underwear? You have a theory actually you literally you popped me early. You literally made me laugh when you sent me your theory about it. Can you speak to what your theory is as to why he was in his underwear last night in the middle of that interview?
All right. So Adam Aron, the CEO of AMC, did a private interview, which was live streamed on YouTube with over 80,000 viewers. And there was a segment within the interview where his camera shifted onto his lap for a split second, almost like it was intentional.
Yeah.
And you could see that he was sitting in a blue shirt with a red tie and no pants. A lot of people were poking fun at this, but I was reading into it and going down the rabbit hole late last night and discovered that some people are saying that legally he's not able to say anything that would persuade the stock price. However, his message to us might have been the shorts haven't covered. And what that means is there is very much possibility, very high possibility, very high probability that this squeeze could happen. Will it?
Right.
Who knows?
Subliminal indeed. Subliminal indeed. Cool, man. Well, I will let you go. I know people have asked, like, what's your price point? Like, what's your set price? Where are you trying to buy out? And I know we've both followed Trey. Trey kind of says, like, ride it up and then slowly start to sell out, or sell out your initial investment and then kind of keep riding the gain. So if you want to speak to that real quick, we can. If not, we'll call this thing a wrap. But I know people are curious about that as well.
I would say do some research on, maybe Google exit strategy on short squeeze. There's a lot of information, a lot of components and variables that need to be, evaluated to come up with your own strategy. I'm evolving and changing mine every day. So I don't want to put that in a small box. But if you're going to, put yourself into one of these investment vehicles, I think that you should do a little bit of due diligence on your own and come to your own conclusion on how you want to enter and exit.
Got it. All right. Alex, man, I appreciate it. I'll let you get back to it. Thanks so much. We're going to pump this out as much as we can because people, they want to know, what do I do with AMC? So I appreciate your time, insight, and wisdom on this, and nothing but the best, my friend.
Thanks, Chris. Take it easy, man. Have a good one.